A lot of us have interest in buying penny stocks or stocks which are pretty bad, which have beaten down a lot or which have fallen on a lot. But we just buy these kind of penny stocks or bad companies at any random price. Now, there's a saying in markets that you can buy a very good company like an Infosys or Reliance at a very bad price, and you can also buy a very bad company at a very good price. So today, I'm going to discuss how you can buy bad companies at good price, or how you can buy small companies which are not doing well, or even mid cap companies which are not doing well at a very good price using simple technical analysis. Hello, I'm a trendline investor, and in this channel, we discuss a lot of concepts around technical analysis and how you can use that for your trading and investing decisions. Believe me, technical analysis is a beautiful world of study which can actually be used to time markets. Okay, so having said that, let's get started with today's video on how to use technical analysis to buy bad companies or penny stocks. Okay, let's move on. So the first thing is I want to discuss a few points before we get into rules that you must follow. Now, first of all, what is a bad company or what is a penny stock? Now, a bad company or a penny stock usually would have pretty bad sales, pretty bad profits. I mean, the trend of the sales and growth and the profit growth would not be, very stable. It would be pretty bad. The sales, it can post good sales of in 1 year, can post a very good sales. In 1 year, can post a 50% degrowth in sales. It can post 1 year profits. It can post 1 year loss. And the trend can be really confusing. Or penny stocks are companies which usually have very small market cap, usually 20 crore, 30 crore, 40 crore, even 100 crores. But anything which is pretty good in terms of sales and profits will not fall in this category. Okay, so today I'm going to focus on purely companies which are pretty bad and how you can buy them, and stocks which are pretty small and how you can buy them after a major crash. So usually stocks which are pretty bad have a prior downtrend in terms of the stock price movement. Now, that's the second point I wanted to mention. So any stock which has been going down continuously for the last 3 years, 4 years, 5 years, or 10 years, in cases of Suzlon, the stock has been downtrend for almost 10 years, right? So these stocks are what we call bad companies, and we want to focus on them. And these companies are usually known for their bad accounting practices or incapable management, where they don't know how to allocate money that they have into different operations or new businesses, right? So this is what we're going to focus on today, and such companies. Now, a strong advice: if you're a newbie in markets, do not trade in such companies, do not invest in such companies. It is a huge risk, and you can lose your capital that you invest. And you never buy such companies for long-term investment. So I am not giving here techniques to buy the stock for long-term investment. It's purely from a short to medium term trading, probably from a few months, probably to max 1 or 2 years. Right now, that's going to be a time period that we're going to focus on. But why should we even buy such kind of companies, right? Or why am I talking about trading in such kind of companies? Now, remember, companies which have been falling quite a lot are stocks which have been hated by investors, which have been dumped by investors, traders, a lot of retailers, and they tend to go in a long consolidation for many years and many months. Now, remember, such companies, when they have been kind of abandoned and when they start again gaining traction, the momentum in such stocks are pretty big, right? So you can have 100% gain, 200% gain, sometimes even 10x gain over a period of 2-3 years, especially if the stock management is changing, or if there's a change in the company strategy, or if the fundamentals are changing, then the stock can even do a 10x returns, right? So we're going to focus on these companies for a single reason: to make money, right? Finally, we want to make money in markets, and it doesn't matter how you do it. You need to have a strategy and you need to follow it. So that's pretty much the objective of why we are discussing this video today. So what to expect in terms of targets? So I usually don't really focus on targets much, but I focus on risk management. So we will keep our risk in check. There are a lot of videos on my channel on how to manage risk, and we will focus on risk management, and we will see how much the market gives us. Okay, so that's pretty much a short summary on what we're going to discuss today. Now, a few rules as to how you should buy stocks which are not good or companies which are bad companies, right? Now, the first thing is you need to switch to weekly charts for analyzing charts, or even monthly charts if you are a conservative investor or a trader. Now, the reason I say weekly charts and monthly charts is because we want to assess the trend of the stock. Now, usually a bad company, if it's not doing well, the stock price usually tends to be in a downtrend. So you want to be able to analyze a stock trend, and that's best done on the weekly charts or monthly charts. So that's point number one. Now, point number two is we will always wait for the stock to change its trend in of the price. So the price trend should change from a downtrend to an uptrend, right? So there are some videos on stage analysis on my channel. You can check that out to understand what is an uptrend, downtrend, and how you can identify such stocks. I'll also talk about that in this video shortly. So price should close above the previous pivot high. I'll tell you what that is shortly, but do keep this in mind that the price should close above the previous pivot high, which indicates that the trend is changing. So that's the rule number two. Rule number three is you need to wait for CCI 34 to close above 100 or cross 100. Right now, this indicates that the stock is in momentum on the weekly charts. Now, remember, just because the stock CCI closes above 100 or crosses 100, the stock trend will not change. For us, the ultimate rule is this rule, the second rule. Okay, that's why that's the second rule. Next rule is you need to wait for relative strength to cross above 52-week moving average of the relative strength, or even if RS is rising, it's fine. Okay, now there is separate videos on relative strength on my channel. You can look at it and you can understand how to use relative strength. But we'll also discuss in this video in a crisp manner. Next is your position sizing, which is the most important rule for trading bad companies or penny stocks. Swing trading, maximum you should not go above 25%. Position trading, keep it maximum 10%, and investing, don't go beyond max 5%. Right? And usually a first position, you can take multiple positions in the stock, but your first position should be only 50% of this max position size over here. So for example, if you want to enter a stock today, and if you're doing it for investing, do not invest more than 2.5%. Now that's a pretty basic rule. Finally, position sizing, yes, is very important. I'm going to stress this on all my videos. I do stress this. Position sizing is very important, especially for this, because these are risky companies and your stock can fall, right? So risk management is key, and then you can add more. If the stock heads higher after you add, then you can add more, right? So that's some of the rules that you have to follow. And if you're liking this video until now, don't forget to share this video with your family and your friends, and you can support me, support my work, support my content that I do on Twitter, YouTube by buying me a coffee on Buy Me a Coffee. The link is over here. Okay, so let's move on. So today I'm going to take the example of Suzlon, a very famous company which literally destroyed billions of worth of money for retail investors. But today we're going to discuss how to buy such companies. Now the rule, remember, first rule is to buy only if the stock crosses below the previous pivot high on weekly charts. Now here I have Suzlon Energy's chart on weekly, and the first rule is to note the trend of the stock. Now the trend here is completely down, but how to look at a trend from a very objective way, right? So here you have something called a pivot point high-low indicator. In TradingView, you can look at that and you can plot that indicator, and then you should have these numbers plotted. Now, whenever the number keeps going down like this, right, it keeps going down and down, the stock is set to be in a downtrend. And whenever the price crosses the previous pivot high, so the price now crossed here above the previous pivot point, then that means the stock is in an uptrend. So it's pretty simple. When the price on the weekly chart closes above the pivot high here, that means the stock is in an uptrend. And if the price closes below the previous pivot low, then it is in a downtrend. Okay, so here we're going to focus only on uptrends. So the first point when Suzlon went an uptrend was in April 2007. After many years, the first time the stock went an uptrend was here, right? So the pivot point was coming down, and then April 2014, the price closed above 11.3 for the first time. Now that's the first time when the stock is actually in an uptrend, okay, in Suzlon. Now here, once the stock is an uptrend, you can actually buy pullbacks, you can buy continuation breakouts, you can do however you want. There are three main strategies, right? So styles, one is swing trading, one is positional trading, and one is investing. This video, I'm not going to discuss each. There are three separate videos on my channel. Do check it out. I'm just talking about, from investing perspective, when can you actually buy the stock? So from investing perspective, you can buy the stock at this point. Here, allocate 2.5% and see where the stock heads. Now, stop loss for you would be the previous swing low here, or you can also keep it here. Now, as I said, there's a separate video on investing. I've discussed all the rules there. Please go and check that video. Right, so once you enter here, the stock is in an uptrend, keeps going higher, right? And then it drops all the way and goes higher. Now, a very important point to understand in companies which are doing bad is the volatility. These stocks tend to go down a lot. Even in an uptrend, you see the stock kind of goes all the way down, it goes all the way down, it goes all the way down. Now, this stock here is in a clear uptrend, but the price falls quite a lot. So you have to have the stomach to digest such falls, which means you need to be brave enough and you need to accept that if you want really multi-bagger gains, you need to go through such deep drawdowns. Okay, so after you buy the stock here at this point, the stock heads higher, it comes down, it goes higher, it comes down, it goes higher, and it comes down. Now, the first time the stock closed below the pivot low here, and then you exit the stock here. That's when the stock enters a downtrend, right? So when the stock closes below the previous pivot low on the weekly charts, that's when the stock enters a downtrend, right? And that's when you exit. Now, next time again the stock crossed here at this point, right? So again the stock entered uptrend. We had a price close above this point in March 2017 after 3 long years, right? And then again the stock kind of, this one did not work out, so it went all the way down, and here we had a close below the previous pivot low, so it's an exit, right? So second trade did not really work. The first trade could have given you minor gains or around 60-70% gains, but the second trade did not really work. Now remember, in markets there is no holy grail strategy. Every strategy will have its own flaws, and you will not have a strategy which gives you 100% returns always, right? So that's a very core concept for you to digest. Next, after this stop loss hit, the next time the stock crossed the previous pivot high was in June 2020. For the first time, it closed above 3.2. The pivot points came down, and it crossed here, and the stock kind of went up, came down, and again, it's been an uptrend even now, right? So right now, the stop loss is around here. It's pretty deep, but that's how investing in these kind of stocks are. Now, if you are a positional trader, you need to always book profits at much. You can't wait for such long drawdowns, right? You can't wait for the stock to come all the way down. So do check out my videos on positional trading, swing trading, and investing, and you can find out your own exit strategies. But here the concept is to tell you when is a good time to buy such bad companies, right? You buy when the stock crosses the previous pivot high, CCI is above 100, and relative strength is rising, or relative strength is above the green line. The black line is above the green line. These are the three main rules, right? Same thing here. Price crossed above the previous pivot high for the first time after this downtrend. We had CCI also crossing 100, and relative strength also was rising, or it was above the green line, right? And then again the stock entered downtrend here, came all the way down. Then again at 3.2 closing is when the stock entered again uptrend for the first time. CCI was pretty good here, and also relative strength was pretty good. That's when you buy. Now this time you had really a very good trend up, even though you had crazy drawdowns here. Right now, that's a pretty simple strategy to buy penny stocks or bad companies. Right now, remember, these stocks move up a lot, move down a lot, so you need to be patient enough and don't allocate too much. Right? Even I'd say, even if you're investing, don't allocate more than 2.5%. Stick to max 2.5%. That's more than enough. Right now, I'm going to give you some live examples, which are pretty good setups, which have satisfied the rules that we discussed, and I shared these two setups in the Sunday video. So I'm going to reiterate these two setups here. The first setup here is Spencer's Retail on the weekly charts. It has crossed the previous pivot high for the first time since November 2020. CCI is good. Relative strength also is good. Right now, this company is a bad company. It hasn't posted profits. It hasn't done very well in the last many years, and it is looking good for the first time. Right. So if the stock kind of heads higher, it can make new highs. Who knows? There can be a change in strategy. In the company strategy or management, it can do very well, or it can just flop and go down, right? So that's how markets are. So this is the first company, which is Spencer's Retail. The second company is 3i Infotech. Now this company, there's a huge change in the management strategy. The company has big targets of 1,000 crores in 2024, and it also has good guidance for operating margins. So it might work out sometimes, right? Sometimes it might not work out. But in this case, again, the stock has closed above the previous pivot high. CCI is good, and relative strength also is rising here. So overall, very good, two good setups. Bad companies, but if even one works out, it's a pretty good bet, right? So I hope you liked my analysis until now. In case you did, don't forget to subscribe to my channel and like this video as well. Otherwise, I'll see you in another video. Until then, take care, stay safe, and trade safe. Bye bye.